yonder ministers, propaganda ministers. I've got a aim in view. I'm gonna walk all over you. Cause madness, madness, I madness for yonder ministers. This is madness. Man, I know I'm filled with gladness. It's gonna be rougher. It's gonna be tougher. And I won't be the one who's gonna suffer. Oh no, I won't be the one who's gonna suffer. You are gonna be the one.
Okay. Thank you for joining me, whoever's joined me. Gonna be getting started in literally 2 minutes.
Don't lose the beat now. Just lift your head now. It's festival fight. Listen here. You hear the people sing. Boom, boom, ba ba boom, 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 festival. Boom, boom, ba ba boom, 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 festival.
Let me just make sure this is working. Okay, let's get the screen share sorted here.
People are dancing, teenagers romancing. It's carnival time. Listen, Freddy, get ready.
Okay. Just gonna get this screen share ready on Facebook. Bear with me a second, guys.
Yeah, you can.
Can hear you, can hear you.
Oh, yeah, okay.
Boom, boom, boom.
You know, but the old school reggae roots. Come on.
Yeah, man, come on. Boom. Just trying to get it to share on my Facebook as well. Bear with me a second, guys. Okay, if it's not sharing on my Facebook again, Facebook don't want this to happen. Okay, so I'm not going to do Facebook today. We've got it on. Okay, cool. Ideally, I wanted to share it on Facebook, but oh well. Okay, so let's get this show on the road. For whoever's watching on YouTube and on Facebook, thank you for tuning in. Those of you on the Zoom, feel free to comment when you can. And throughout the show, please keep your mics on mute. So first of all, disclaimer, please do your own research. Our content is intended and should only be used for information use only. Very important to do your own analysis before doing any or making any investment based on your own individual circumstances. You should get any professional advice from a professional advisor or independent. All of any information you may find on my show that you wish to rely upon, whether you wish to make an investment decision or otherwise. Cool. I'm just gonna and then cool. Okay, so let's get into the slides and into today's presentation. Ba ba boom boom ba ba boom ba boom 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 ba ba boom ba boom boom boom. Okay, just wait for it to load. Okay, all the latecomers are coming in now. Bear with us a second, guys. Just gonna hide that there. Anyone that's late now is late. They're not gonna make it in. Okay, so welcome to today's episode of The Game. And today we are discussing the future is now, because if you're not investing now, then you are a little bit in trouble. So 2021 is the year to be investing, in our belief. So you can catch this again on the YouTube, see what is C360. So I am Mr. Harding, and this is the game. So who is making money from COVID-19? That's the first thing that we're going to address and the first thing we're going to look at. So one of the best articles that I saw, which clearly outlined it, was actually the New York Times. So for me, in terms of credible information, I like to go with sources that I know they are paying people to do the research. I like to go with sources, not really Facebook or YouTube. I like to go places where the facts and numbers that they're putting out are traceable. So we can see that the New York Times did an article recently showing that out of the 22 billion that has been available from taxpayers' money towards COVID-19 in the UK, over half of that has actually gone to friends of politicians or people that have no prior experience in the thing that they're getting the funding for, or people or companies that have history of controversy. So how's this happened? It's happened because there's been a parallel supply chain. So from April onwards, all bids to supply PPE were handled by the team of Lord Paul Dayton. I'm sure he knows a lot about PPE. He probably does. So then what ended up happening was there was a VIP lane and an ordinary lane. So 14,000 suppliers went through the ordinary lane and submitted their bids through the public website. Then there was the VIP lane where 493 suppliers went through and they were the high priority and were recommended by government officials or politicians and were sent via secret email. These then went to the Cabinet Office and they did their due diligence and conflict of interest checks on companies. Then they went to the clearance board for any PPE contracts worth more than 6.7 million required extra approval from the group. Now, what's funny is the ones that went through the VIP lane, 1 in 10 of those applications actually succeeded and went through on the high priority lane. Now, only 1 in 100 out of the ones that went through the ordinary lane were actually awarded contracts. So when you look into it, there's some very interesting controversies that happened there with that. Highly recommend checking out this article. Just go on New York Times and just type in pandemic funding and you'll be able to see how bad it actually really is. Just people that have got no experience whatsoever in anything to do with COVID getting funding of up to 78 million at a time just because they're mates with somebody that's a politician now. So which country has bought into the vaccines the highest? As we can see that the majority is being bought up by the European Union, up to 1.6 billion. The United States is in second place. Third place is Canada. No, actually, second place is India. Third place is the United States. Now, one of the things that's been set up is a coalition called COVAX, and their global initiative is to buy enough of the vaccine for people and for countries that don't have the big money that won't be able to just rush in there and buy it. So here we visualize the confirmed number of doses purchased by each country and the income level. So the green is the high income levels and the blue is obviously the lower income levels. Now, what's interesting is obviously India has a way higher population than the United States, but when you look at it in terms of relative scale, the United States hasn't actually bought that much. So we're going to go into that a little bit later. So what I want to do is I just want to kind of discuss the process of how vaccines actually get their clearance to go to market. So I've done quite a lot of research on this. I've been researching this since maybe early January when this thing played.
Oh, yeah, he's close with you.
And mute. There we go. Okay, cool. So some excited people in the background, maybe being attacked by a child. That's what it sounded like back in there. Someone was being turned into a human climbing frame. Bear with me a sec, let me just find my notes. Okay, cool. So first of all is the discovery and experiment stage. So if you see the journey of a vaccine candidate, on average, it takes 10 years to develop a vaccine, according to the CDC. There are 6 stages involved in the process from start to finish. The exploratory stage, this is typically consists of basic lab research, which can last anywhere from 2 to 4 years. In this discovery stage is where all the experiments and the R&D happens. It normally takes quite a long time. Now, the second stage is the preclinical stage. This stage uses tissue culture or cells culture systems and animal testing to give researchers an idea of how humans might respond to the candidate and the vaccine. So this is loads of test tube stuff. So this is where they're really checking. It's more R&D. So it's gone from the lab to now the testing stage. Now, third is the clinical development. Within the clinical development stage, there are 3 phases. Phase 1 examines the response of a small group of people and does the kind of placebo test. Highly recommend, if you're really interested in this, into watching, what's it called with Matthew McConaughey? Dallas Buyers Club, where he has AIDS and they keep recommending a medicine that's not necessarily that great for people over the alternatives that just aren't being funded by the big pharma. So again, then what happens is the most expensive phase, which is the clinical trials. And this is where they're checking for side effects in humans. Now, the reason this is the most expensive is because you have to pay loads of people to come in and do it. And then number 4 is the regulatory approval. So this is where your national authorities step in, like the US food, the FDA, Food and Drug Administration, and then all the EU ones step in. Now, these normally take quite a while to happen. So in terms of the processes, so phase 3, before you even get to the post-approval, normally takes 3 to 5 to 15 years to even get approval. And it normally costs around 40 million to 2 billion. Now, phase 4, the company must send a full review of the entire process that they've gone through to the FDA, and this can take 6 to 10 months. So number 1, with a pharmaceutical company, if you're looking at investing, you want to look at how long is their drug pipeline. How many other drugs do they have in their pipeline? Is this their first time? And are they just being funded just because they've got mates in the government, like what happened with Kodak? And how far do most of their drugs get in their pipeline, or do most of the drugs that they're making get stopped during the clinical trials because something's a little bit, something's getting stopped in the clinical trials all the time. A company's got stuff that's always getting stopped in the clinical trials. That is a big danger sign. And then number 3 is the size and the scope of the drug in the market. Now, obviously, this is the biggest size and scope of a drug in the market since probably the AIDS pandemic. This is like the biggest demand ever. And then from there comes, even once you've got all that approved, now comes the big task, and that's the manufacturing and quality control. And this, you can see here, takes 6 to 36 months to produce, package, deliver, and sort out supply chain systems to actually get these goods out to where they need to get to. So now most of this has actually been skipped. All this, well, not skipped, but rushed, we should say, these processes for the COVID situation. And in terms of the biggest distributors normally for drugs, we have Johnson & Johnson. They revenue 56 billion, Pfizer in second place with 51 billion, Roche in 49 billion, Novartis 47 billion, and Merck at 46 billion. And then Merck and DuPont have done quite well there. So why has the COVID vaccine come out so quick in comparison to other drugs and in other cases? This is because it's been a global effort instead of an individual company trying to create something. This has been a global effort of multiple research labs and universities around the world collaborating all at the same time. So even though no approved vaccines for other coronaviruses such as MERS and SARS, previous research into these things did help in this case, and that was using the messenger mRNA technology. So the mRNA vaccine platform technology, which the Pfizer and BioNTech vaccine uses, has been in development for over 2 decades. I've done my research into that again, and they've had this technology available from when SARS hit. I think it was in South Korea in 2008, I think it was, or around that time period. So the technology instructs our bodies to produce a small part of the COVID-19 virus called a spike protein and triggers the immune system to make antibodies to fight against it and prepares the body for an actual COVID-19 infection. Now, one of the things, if you're interested in how this stuff is all working, that I highly recommend you check out is something called the AlphaFold. When you start doing the AlphaFold research, you'll realize that the future potential of how quickly they're going to be able to discover vaccines is crazy. So just to give you economy to scale here in terms of the AlphaFold, what it is it's basically the protein that is attached to a virus. You need to kind of, like a jigsaw piece, finding a way to match that unique shape. And it's only through DeepMind and through AI and high computer processing you can do this rapidly. Now, there's 150,000. There's 170 million different protein shapes. And so far, we've discovered between 150 to 150,000 of those different shapes. And it normally costs between 100K to 1 million per structure, and normally takes about 6 years to discover one protein structure. Now, what AlphaFold with the AI is managing to do that in about 6 days, and also do that for the price of around $1. So we can see that this whole big pharma, this might be the last chance for big pharma to make some money. So again, if we look at the history, you can see the Spanish flu, how long it lasted for and how long it took the vaccine to make, and the death toll. So in terms of how bad things are with this pandemic, you can see coronavirus killed 1.6 million, and it's taken just a few months to figure out a vaccine, whereas the SARS, you can see, killed 774 people, and there's still no vaccine for it. Swine flu killed 575,000 people, and it took from April till September to find a vaccine, and lasted 6 months. So we can see from swine flu, MERS, and SARS, so 2003, this technology they've been working on it for a while. Now, in terms of where the money's going, it's actually Oxford University that's making the most amount of money from this whole situation. So they've made 2.6 billion, and that's from, in terms of the amount of doses that they've co-signed on, and you can see 1.5 billion of those doses are going to India and the EU from Oxford. Now, Pfizer, they aren't actually generating that much when you look at it in comparison to Oxford. Pfizer are just distributing 71 million doses, and that's mainly to the EU, whereas the other big players like Moderna, what's happening here is Moderna, if we look at it again, is going to the EU. So it's just kind of like a split here. So let's get into a little bit more of the juice. So we want to really find out who are the big investors in Pfizer. So this is the juicy part now. So we're going to track, using well wisdom and looking at the last 13 Fs, who are the people that have actually invested in Pfizer. And this is where you're going to be very, very surprised, because I asked the question, do people think it's the Rothschilds? Do they think it's Bill Gates? Do they think it's Donald Trump? And you're about to find your answers right here. So we can see there's been a 21% increase by the big funds, by the big banks in their position in Pfizer and investing in Pfizer. We can see there's been a 17% change in the amount of big funds and banks that have put this in their top 10. So it's got a lot of attention, as you can see. Now, let's look at who's got the most money in it, first of all. So who's got the most money in? we can see that it's the Vanguard Group and BlackRock, then State Corp, then Capital World Investors, then Wellington Management, then Bank of America, Northern Trust, Bank of New York Mellon, Morgan Stanley. It's actually not any of the names that you probably thought would be there. So if we're thinking maybe they've already sold, because we can see Vanguard Group have sold 6 million of their shares, but they've still got 475 million. We can check the change in shares. So who's sold the most amount of their shares? Wellington Capital Group and Goldman Sachs. So we can see it used to make up 0.31% of Goldman Sachs' portfolio. It now makes up 0.16. So again, very interesting here that all of the people that we hear that they're investing in Pfizer actually aren't. So let's look at ownership. Who's got the biggest ownership stake inside them? Again, Vanguard Group, BlackRock, who's got it at the majority of their portfolio. Gavea Investments, and they've only got 5 billion in comparison to the BlackRock Group. Oh, that's not even 5 billion, 5 million. So again, not that big. So let's go and do some digging on the people that people think are invested. So Bill and Melinda Gates Foundation Trust. Let's see where they're at. So we can see already the top sells, Schrodinger, Liberty Latin America, Berkshire Hathaway, they've actually increased their position there. And when we look at it, this is the breakdown of where their money is actually going. So the majority of their money is actually in the finance sector, then in industrials of the 22 billion that they have. And if we look at it in terms of healthcare, we're looking for this color here. They've not really been in healthcare since 2009. So men lie, women lie, numbers unfortunately don't lie. And then if we look at their biggest holdings, whereas what's their biggest thing that they are invested in? Let's have a look. So they have the most money in the finance sector in Berkshire Hathaway. They've actually increased their position there. It's changing their portfolio. What's been the biggest change? Again, Berkshire, changing shares, consumer discretionary and ARCO. So there's literally nothing, absolutely nothing in the Bill and Melinda Gates Foundation on Pfizer, which I found very interesting. So then let's look at the Rothschild Investment Corp. So before I do that, actually, let's just figure out who the BlackRock Group are, because before I started doing this investing stuff, and I did try and check if they're evil and if they have any scams going, but guess what happens? Absolutely no bad press. Now, the BlackRock Group are worth 7.81 trillion in assets. Just gonna take a pause there. So a lot of people are really worried about Bill Gates, and he's actually, to be able to fathom the difference of wealth between Bill Gates as a billionaire and companies that even make $1 trillion. There is 1,000 billion in $1 trillion, and BlackRock have 7.81 trillion. So BlackRock, yeah, there's a gap. there's just a slight gap. Let's check the other company, Vanguard Inc. Vanguard Inc. 6.2 trillion in global assets. And we're only looking at the top two whales here. We're not even looking at the rest of them. So again, we can see the most important thing, like Sarah's highlighted, is that 6.2 trillion in assets, not in cash. That's in assets. So the problem, what people don't realize with the Vanguard Group and BlackRock, and why you'll probably never see any bad press on them, is because they're invested in every company on the market. And now, because they're the biggest investors in the majority of companies on the market, they pretty much control what press goes out. If BlackRock or Vanguard sell a heavy position in your company's doomed. It's finished. And there's certain investment funds that can do that, like Warren Buffett's company, Berkshire Hathaway. If they sell their shares in a company, that a company 8 out of 10 times collapses. If Vanguard and BlackRock do it, your company is definitely finished because everyone just follows what they do. Now, let's look at these Rothschilds. Where's the majority of their money? Oh, look at that, in DraftKings. Look at that. The majority of their money is in Apple. That's a coinky dinky. I'm not going to say that I'm not a fan of Apple, but if you know me, then you know I got a few things that I like to say on Apple. So Rothschild's account is worth almost $1 trillion. It's not quite $1 trillion yet. But obviously there's other assets that they have that aren't in this investment side of things. So let's look at the Rothschild's top holdings. You can see it's Apple, Amgen, Abival, Microsoft, Google. And again, I don't really see Pfizer on here, unfortunately. So I'm not going to say that we're being lied to and being distracted, but it kind of looks like we're being distracted. Just going to say. So yeah, bit of an interesting one when you do the digging and you look for the paper trail. So anyone that missed that, if you want to go and do that research yourself, the website is called Whale Wisdom, and that will allow you to look at exactly who is investing in Pfizer and who is not investing in Pfizer. And you'll be able to see that a lot of the conspiracy theories that are out there are actually, unfortunately, have no proof to be true. Some of them, let me just mute Martin's mic. I'd love some of these conspiracy theories to be true, but unfortunately, again, like I said, the money doesn't lie. So that's one of the few reasons that I think a lot of these things are created and put into the media, is to make people feel helpless, to make people feel like that they're being controlled. And if you make people feel a certain way, most of the time people act on the way that they feel. So if people feel controlled, then they're just not going to take action. They're not going to go and look for the information. They're just going to be like, okay, yeah, that's what it is. And why is it what it is? Because that's what everyone's saying, versus going and looking. So what we're going to do is we're going to get you ready for the party, which is the party of 2021, the party of a lifetime, because it's been a tough year. So we know there's going to be a party in 2021. So are you ready for the party? Who's ready for the party of 2021?
Yes.
Yes, let's do this. Let's make some money in 2021. It's going to be a big year. 2020 has been a great year. For those of you that have started invested and started looking in the markets, like myself and Sarah and Homer and a couple of you others that are on the call. So what are the important things to look at when making your list for your fundamentals to invest in? Obviously, the fundamentals is doing the research on the company. It's not hard. It doesn't take long. If you want the super easy breakdown, you can go onto hypercharts if you want, which I'm going to show you an example of in a second. Otherwise, just go into Yahoo Finance and just look at the revenue and the profit. Is it going up? If it's not going up, as a beginner, don't invest. Super simple. Next, the technicals. Again, where can you find these technicals? You can find them on Yahoo Finance, again, or you can find them on any of your brokerage accounts or any of the apps that you're using to invest. The technicals should be there. Super basic technicals. Is the chart moving up and to the right? If it's not moving up and to the right, probably not a good idea to invest as a beginner. Now, If you want to get a little bit more advanced, what are the things that we talked about the Bollinger Bands, we talked about the RSI, we talked about the stochastics, and I'm happy to go over that again with anybody that wants to. Next is the economics. What's the situation for that company that you're looking at investing in? And what is the impact that they're going to make on the marketplace? Because wealth and money is only created by the value that you bring to the marketplace. So sometimes there's a couple of hype stocks out there. There's a couple of things that are a lot of hype. When you actually do the research, are they actually delivering anything? Are they actually bringing value to the marketplace? Now, one of the things I've added to my list is if there's doubt, it's out. If I'm not feeling like I could argue and back its case in an argument, then it's out of my list, because anything that I'm investing in, I need to be 100% on. That's what I've learned about this year. Next thing you want to look at is which, so the going to the party, this section here is like your outfit. You want to choose your outfit, and you want to make sure that you are ready, and you've not got any holes in your pants, you've not got any paint on your clothes, and you just want to be ready. And that's why this bit here is the outfit. Now, next, after you've got your outfit, you want to check that the party that you're going to is in the right sound that you're interested in. So if you're not into heavy rock music, don't go to a rock club. If you're into tech, invest in tech. If you like consumer discretionary, which is like retail stuff like LVMH and stuff like that, invest in that. It just makes sense to go to the party that fits your personality, the things that you're already interested in and already reading about. If you like industrials, invest in industrials. If you like healthcare and you're in the pharmacy industry or you're a doctor, it probably makes sense for you to invest in healthcare. So next is you want to check what kind of people are actually at this party. Is there any winners? Is there any losers? Is there any backups that you could hang out with if some of the winners go? Or is there any toxic people there? Now, in terms of this party and the people that are there, who are the winners from 2020? We already know. Tesla, absolute straight bad boy winner. Amazon, absolute bad boy winner. We already know that. Costco, absolute bad boy winner. Who are the losers? Well, pretty much the whole banking system, HSBC, NatWest, all of them, we've seen it. They've had a terrible year. Now, the backups are your companies like your Apple. It's not really a backup. They're pretty much a winner, but you wouldn't mind hanging around with them. You wouldn't mind chilling with them for the next couple of years. And that's what you got to think is this party is lasting for 5 years now. Anything you're investing in now, you want to really be looking at it that, am I confident that I could hang around with this person at this party for the next 5 years? And then is toxic. So we've got toxic companies like Nikola and Hertz, where they were just fake. They were just pretending to be something that they weren't. And then when it came to it, they weren't it. They got asked to dance and to skank, but they couldn't do it. They didn't even try. They just couldn't do it. And then next is the energy of the party. So depending on what industry you're thinking of investing in, what companies you're investing in, you got to check the energy around that company. So what is the state of the consumer? Do people actually want to vibe with it? Are people actually still buying Apple products? Yes, they are. So it makes sense to vibe with it. Are people still, is Tesla still cool? Are people still hyped about it? Yes, they are. What's the geopolitics around it? Like, what's the geopolitics mean? Is there a beef between that brand and a certain country? So we know already that Disney is trying to break into China and they're doing okay. So that's good. But if things changed, then that might not be the case. Next is obviously the economy and the trade / GDP. So depending on the country's situation and the company that you're thinking of investing in, depending on the country that they make the majority of their money from, investing in them over the next 5 years might be a bad idea. So I'll give you an example of that. That would be like the recent advert that I saw for me to invest in Center Parks. I don't know if my video's on, but yo, I'm just going to just put it out there right now. I don't know if I can get sued for this, but if anyone I know is investing in Center Parks, I'm going to slap them. So the future is now. So what we want to do is we want to really select our companies that we're going to invest in. And I'm just going to quickly do about 2 or 3 of the companies off my list. And we're going to look at the past, because the past helps us figure out, the past and the present performance helps us figure out where it's going to be. So we want to look at the last 5-year performance of these companies to try and predict the next 5 years. So we're going to calculate just by taking the percentage growth of the previous 5 years, dividing it by 5, and that will give us hopefully a percentage of how much we expect the company to grow by over the next 5 years. And that way we can figure out what price we're going to probably get out in terms of the investments that we're making. So, and remember, an investment isn't for a season, it's for 2 to 5 years or even a lifetime. So the key fundamentals, like we said, are that we're going to look at are the percentage growth, the revenue growth, and the return on investment. So let's go to the next slide. So ultimately, a lot of people ask me and they want to see my results and what I've invested in. So this is my results in 2020 that I'm pretty happy with as a first-time investor that I took very seriously. So Tesla got a 98% return, Nvidia 98% return, Alibaba 89% return, Facebook 96% return, Amazon 92% return, Google 94% return, Gap 29% return, Apple 37% return, Netflix 94% return, Zoom, can you believe it? I lost 48%. What? I'm gonna have to swear. What a dickhead! What an absolute dickhead. Square also took a fat L on Square. 85% loss. PayPal 96% loss. Adobe didn't make any money in it. Shopify 88% loss, and Spotify 97% loss. So what has investing taught me in 2020? That you have to take L's. And what's the easiest way to take an L? By pulling out too early. I was in Zoom and then I was like, oh, this isn't moving. Came out of it, and in 3 days it went up by 200%. So it's taught me whatever you pick, stick. Same thing happened with Square and PayPal. I got in them, came out of them. Same thing with Tesla. I'm going to try and find my breakdown on Tesla, and you'll see that I just kept coming in and out of it. I was like selling it every month and then letting it grow by like 20% and then getting scared and then coming out. And I've just really realized it's just about sticking. I had incredible gains on Spotify. I think got to like 150% and then sold, got back in, it sunk and then went back up. But I got out at the low instead of getting out at the high. So that's what I've learned there, is to just damn well stick. Okay, cool. So this is my pick list for 2021. So number one pick is ARC W, which you've probably heard me talk about before. They're on my Facebook. They are just a ETF that gives you coverage to some of the best companies in the world. I'll go over that later. Number two pick, Tesla. Why? Because I absolutely believe in this company, and I absolutely believe. So for me, one of the main things that I look at when I'm investing is, do I believe in the CEO? Can I back the CEO? I back Elon. Like, for me, I back people based on the consistency of how much they deliver on what they say they're going to deliver on. That's what I back people on. And Elon has consistently delivered on what he says he's going to do. Not always straight away, but eventually. And that's very similar to myself and people that I like being around, is if they say they're going to do something, they're going to do it. They get it done. It might not happen if they say it's going to get done for December. Sometimes life happens and then it gets done in February, but then they over deliver. If they said they were going to deliver 100K, 100,000 cars, they actually end up doing it a little bit late, but then delivering 200,000. That, I love that. Square, done my research on that nonstop. Love it. I just think Jack Dorsey, again, he's the CEO of Twitter, and I think Square and what they're doing at the moment with the Cash App, I think they are going to majorly cause problems for the banks. Just the ability of people being able to transfer money without having to use a bank account or a bank card, just and being able to pay for things just by putting your username on things, that just makes sense. Instead of having to put your bank details and it's just long. They've just made everything so much more simple. And I believe in that going forward. Nvidia, I've done loads of research on that. I've watched the investor relations stuff on it. I've watched so much stuff from the CEO explaining everything about NVIDIA. And I think these guys are making the future of everything. They're making the future of the cloud space, the future of gaming, the future of mobile. I think the thing that solidified my investment that I'm going to make in NVIDIA was the fact that they bought ARM. So NVIDIA normally make chips for big data centers and for computers and games, but now they're now in the mobile space, which that's just, they didn't even need to be there, but now they're there. And then number 5 is everybody's favorite CEO, Mr. Jeff Bezos. This guy is now going into pharmacy. This guy, why? He's just a beast. Like, he has no reason to go into pharmacy. But you know what? He does because he can. Because what is pharmacy all about at the end of the day? Pharmacy is all about delivering little packages. Who delivers more little packages and more packages than Amazon? Nobody. So over the next 5 years, I think they're going to murder the pharmacy game. Pharmacies, they're dead. They're finished. That's it now. It's over for them. Because we've all had that experience of going to the pharmacy and they're like, oh yeah, your thing's not ready yet. And you can see it on the counter. You're like, I can see it. So I think Amazon's just finished them. And again, they haven't even touched on property yet. And there's a couple of rumors that I've seen that they're going to be touching on property. And if Amazon go into property and they do what I've been told that they're going to do, which is if you buy an Amazon property, you put 20K down, you get 20K worth of product vouchers to buy and decorate your house with Amazon stuff, which why would people not do that if they do that? So those are my picks, and that's the reason why I've picked them. And then the things on the side is Bitcoin and Ripple. Done a bit of research on those. I just think Ripple has the best infrastructure out of all the cryptos. Bitcoin, again, now that it's being adapted, I wasn't pro Bitcoin until PayPal got involved with them and Square got involved with them. That was when, for me, that was the sign that they're coming to kill the banks. Bitcoin and Square combined could kill a bank. And we've seen it on the markets that the banks are dying. So that's why I'm pretty confident on that. And then Crown Castle and DLR are my REITs. So the real estate investments that I'm making through the stock market. Any profit that I make in any of my businesses or anything that I do, I'm going to be putting into these because they pay, Crown Castle I think pays a monthly dividend and DLR pays a quarterly. So it just makes sense to try and grow them as quickly as possible and get a nice little residual income from the dividends payments that I can get from them. And then on my subs bench is investing in the Dow itself, in the NASDAQ, SMH, which is a ETF for tech, Hero, which is a gaming ETF, Beyond Meat. Now, Beyond Meat was going to be on my play, but I had doubt. So like I said, if there's any tiny bit of doubt, they're out. AMD, I think, is a great investment. It's just that for me, they're not as strongly positioned as NVIDIA. And then the same with Airbnb. I just had doubt. So even 1% doubt, then it's out. And then Microsoft, the reason it's got brackets around it is because I don't have doubt. I just think that I don't understand what they're doing well enough. I don't understand this whole Azure cloud thing. Once I understand that, then it might potentially be my 6th investment. Then for people that are onshore, we've got the pick list from the Come Up series, which I highly recommend watching on YouTube, the Come Up series. This is their pick list for anyone that's unsure of what to pick. I would say this here: NVIDIA, AMD, RK, Square, XLI, Tesla, and SMH. Can't really go wrong there. And then just the reason why people want to be investing is just really think about it. If you invested $1,000 10 years ago, you'd have 6K if you'd invest that in Google, 9K if you'd invest in that in Facebook, 22K if you'd invest in that in Amazon, and 34K if you'd invest in that in Netflix, and 159K if you'd invest in Tesla. Now, I was talking about Tesla 5 years ago, but I didn't invest. I was just talking about it. And Bitcoin, I knew people that were talking about it 10 years ago, talking about it 5 years ago, but weren't investing in it. So the lesson's been learned. We waste money on all sorts of stuff, on trainers, shoes, bags, cars, clothes. And just a tiny bit of investing can literally change yours and everyone around you's lives forever. So that's that. So what we're going to do is we're going to quickly do a quick breakdown on Amazon. So we'll go hypercharts. We'll have a look at Amazon fundamentally. So this is the best website for beginners to look at the fundamentals on any company. It just breaks it down so beautifully. So here we can see where their money's coming from. So we can see, again, what is always good in a company is if they've got multiple revenue streams, because just like people, businesses need multiple revenue streams. If they've only got two, that's not good, because if one of them gets hit, then they're hit majorly. You see, Amazon's got the online stores, physical stores, third-party seller services, subscription services, and Amazon Web Services, and then other revenue. So we can see the blue bit, which is their online stores, is growing. The physical stores, for some unknown reason, is also growing. And then yellow is their third-party seller services. And we can see every one of their sectors is growing, and overall, they're growing. And now they've just added pharmacy to it as well. So yeah, revenue segments by geography, again, growing. And most importantly, is the international sales growing? Yeah. So again, super healthy. Love that. Revenue, is that increasing? Yep. It's increasing 88 billion to 96 billion. And this is quarterly. Let's do it by annual, so it's just clearer and quicker. So we can see there, beautiful, beautiful, beautiful. Net income, what? Come on, really, look at this. From 3 billion profit to 10 billion to 11 billion. Profit, and most importantly, that's because their margins have gone up from 25% to 40% gross margin. Are you kidding me? Operating expenses have gone up, but most importantly, that is not in their general and admin. That is mainly in fulfillment, marketing, and technology and research, which is always good. So growth, surprisingly, 2017 was the highest year of growth, so it was 42%. At the moment, it's at 23% growth. Operating cash flow, that's growing. Cash and short-term investments, they're sitting on 55 billion in cash. That to me is pretty good. You know what I mean? It's pretty good. So let's have a look at them on a chart, on the technical. Break it down a little. Okay, so Amazon, full screen. And we'll go 5 years. That way we'll be able to do our calculation. Okay, cool. So over 5 years, let's get rid of the comparison stuff. Just gonna mute it all. Okay, so let's get rid of Netflix there. We don't need them. Okay, cool. So over 5 years, we can see percentage-wise. I'm going to show it in percentages. No, it's not going to show you percentages. Okay, but anyway, we can see the growth on Amazon is just a painting. Is it out of the Bollinger Band? Nope. It's actually quite low. It's actually on, believe it or not, Amazon apparently is undervalued. So let's add the RSI to that. It's at 57. So it's actually midpoint. Oh wait, hang on a minute. No, it wasn't. It was actually 44 is where it's at the moment. So let's just make sure of that. 39. Yeah, 39. So it's undervalued. It's not high. So again, great buy-in time on Amazon ahead of 2020. Can't argue with that. Technicals are good. Fundamentals are phenomenal. Can't really go wrong on that one. So for me, that's an absolute say. Buy, 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 buy. So yeah, that's just a quick breakdown on how to do a quick analysis of the long term. Go on hypercharts, have a look at them on technical like that. So now what we're going to do is we're going to try and calculate what we think the potential is for them over the next 5 years and calculate where we think they should be at next. Okay, so let's take how much they've gone up in 5 years. Just going to do this through Revolut on my phone. Okay, so Amazon. Okay, so the past 5 years, Amazon has increased by 377%. So 377 divided by 5, what's that? That is, I'm not good at maths. Where's my calculator? Okay, 377 divided by 5, that's an average of 75% per year. So we're expecting a 75% return next year. I think that's realistic. I think that's realistic. 75% of 3,201 is 3,201 divided by 100 is 32 times by 75, 2,400. Really? So 32 times 75. Yeah, 2,400 added to the price. So that's saying calculating Amazon could be at basically 5,000 by this time next year. So you've heard me say it. Let's see what happens. That's based on it having growth like what it's just had. And I don't think it's going to have a year like it's had this year. So I'm going to half that. I'm going to say it will get to 4,500. That's my point for next year. I think that I could do. Cool. But over the next 5 years, where do I think Amazon could be? I reckon it could be about 7,000. Definitely can double what it's done here. So definitely could be at 7,000. Cool. So that's how I work that out. Cool. So then in terms of my trading, how are we doing with that? Let's load that up, load that up. And again, trading, what have I learned this year? To look at the long-term view, to not trade emotionally. And if you're feeling emotional, either that's because you've won a trade or because you've lost a few trades, to just come off. That's the ultimate thing that I've learned. The one thing that I find it hard to get over though, and I'm working on, is when I've missed the trade, when I've done the analysis and then it's done what I wanted it to do, but I didn't get in it. That is painful. That is very painful. Like this with Bitcoin. Yeah, very painful. So let's have a look at trading history. And I'm not going to count my previous experience because that wasn't serious. That was just me following signals or just like dabbling on FX stuff. So I'm not going to count that. But let's count. Now, currently, 33% win rate, 5 out of 15 trades closing in profit. I'm happy with that. 4-1 win rate, average profit £30, average loss 7. Again, happy with that. Return rate is above 1, which is good. Total return, highest amount of money has been from JD Sports. Free trade, 100% return on JD, 50% return on BT. And then these have been all the news and trades. So yeah, I'm happy with where I'm at after a year. Just got to stay consistent now. And just now for 2021, my ideal thing that I want to do is just trade things that I'm invested in. So I need to now start learning how and when to trade Tesla, ARK, Square, Nvidia, and Amazon. But again, this is going to be a problem because the minimum that you need to get in those is ridiculous. So I might not be able to get in them unless I increase this trading account to 1,000 or more. But what I'm thinking of doing is just trading this account up until I get it to 1,000, then getting into the things that I want to trade. So I'm in two minds on that at the moment. I'm definitely finding that my analysis is working. So that's good. My results are speaking louder than my, ooh, that is a peng entry. Ooh, Pinterest. Ooh, hello. Okay, that's one to look at tomorrow. So yeah, that's where we're at. Let's just quickly finish off by looking at this week's earnings. Who have we got? Don't know who releases their earnings around Christmas, so, but we'll see. Vince Holding, Hayako. Yeah, I didn't think so. Nothing for Christmas. So I'm not going to be doing any of my episodes, my morning analysis this week. We will be back. I'm trying to think when to come back, because I don't want to break the habit. Looks like all the reporting start. 114 reporting on what day is that? January the 4th. Okay, yeah, looks like January the 4th things start heating up again. I'm going to not do Monday the 4th. We'll be back. If anyone's got any questions for me between whilst I'm on the break, I'll give you my time. If I've got the time, I'm here to help. But before I end today's incredible episode, I just want to say thank you for everyone that's supported me through this kind of journey and learning about myself and learning about this industry and learning about investing. It's been great to be supported by you guys and by you, Dominica, who's just peeped your head around the corner. Thank you ever so much. I love you all. It's been great. So if anyone's got any questions for me, fire them away. Anyone got any questions? Anything? No? Okie dokie. Love you all. See you guys later. See you on the 4th.
Thanks very much. Thanks very much, Mike.
Bye.
Cheers. Bye-bye.
Happy Christmas. Happy